Stocks fell sharply on Wall Street today with the Dow Jones down 3.2%, the S&P down 3.7%, Nasdaq down 3.9%, Q's down 3.52%, the banks down 5.2%, tracking the markets lower, and the VIX spiking 31.6%. This is huge, and the trend Q finishing up 2.62. So we've had some really big down moves here on Wall Street today. Hopefully you took advantage of some of them and you've made some really profitable trades. What a great opportunity. But anyways, Carolina Lizan here with Grok Trade. Welcome back, my friends, on Wednesday, November 9th of 2011. And as usual, we are looking at the Q's daily chart. And check this out. Look at this area of support down here at the 56.90 mark, as well as that lower area support here in black. We are basting through both of them here today, closing the day lower. What does that mean? Does that mean that we are set to go lower? It could be. But first of all, we would need to break through the 200-day moving average, which you see here in blue, which is a significant area of resistance for us to watch. And it's at the 56.42 mark. So pay close attention to that low guy, because it's really important. It's really important for you to pay close attention to the 200-day moving average. Just don't forget, because it's a significant area of support. And then look at the MACD. The MACD turned south, but it's still remaining above the zero line, which means that we are still bullish according to the MACD. But we're getting that little tiny negative tick here, the first one in here with the MACD pointing south, but we're still slightly above the zero line. So what we need to really see in terms for us to get bearish again, we have to see a breakout through the 200-day moving average, this little blue guy in here on my chart. And then also we'll have to see the MACD pointing south sharply, breaking through the zero line and entering into bearish territory, which is right below the zero line. That's what I am looking for right now. If I see it, wonderful, we are bearish. If I do not see it, then wait. Sit on your hands and wait for another opportunity to form. All right, so that's one of the rules that I have in place. But anyways, yeah, so that's as far as the MACD goes. And check this out, look at the volume. The volume is picking up a little bit here. It's higher than the previous bar, so that is good. That is a nice confirmation. So we are going down here on higher volume, which is good, but we're still stuck at the average. I like to see a spike in volume at least above the average, but we are picking up some volume in here, which is again a good sign. So pay close attention to the 200-day moving average here tomorrow. Also watch the MACD really closely to see if we're gonna get a sharp move down or up. It just depends on which way we're gonna go. And then also look for some spikes in volume. And the other thing that I want you to pay close attention to tomorrow as well is that upper area of resistance right above the 8 moving average, which is here in green, and it is at about the 58.20 mark. So that is a very important area of resistance for you to watch. Put your trend line on here in here right by the 58.20 mark and watch it really carefully. And then also the MACD and the volume. Alright, so that's all that I have for you for today. Hope it helps you. Safe trading to all of you out there, and I'll talk to you again tomorrow.